Okay, everybody, it's me, Gregory Mannarino. It's still Wednesday, July 27th, 2022. I'm laughing already. Yes, the Federal Reserve, they made this tremendous move today. Really tremendous, incredible, actually. It was so great that the market ripped higher across the board, and we're going to talk more about that. So yeah, we got a 75 basis point hike out of the Federal Reserve. I don't think this is a surprise to anybody. But before we get to the market, before we get to the freak show, okay, world control, I want to talk about some economic news that we got today. But keep this in mind. We had a rip-roaring rally on Wall Street today. The NASDAQ up over 4%. Keep that in mind as I go through some of the beautiful economic news. It's insanely beautiful. Here we go. Pending home sales year over year fall 20%. In the month of June, pending home sales crater 8.6% versus an estimate of about 1%. Wow, that's pretty freaking tremendous here. Now here's a couple of other things I want to read to you. I don't think these are going to be a surprise to you, but again, keep in mind what the stock market is doing. So we found out today 35% of U.S. small businesses could not pay their rent in June. 35% gets worse. 51, my voice is cracking. 51% of U.S. small businesses say that rising costs due to surging inflation may cause them to close. Did you hear that? But stock market off to the races. Absolutely beautiful, lovely. And like I said, when you have an unlimited bond buying program going on via the European Central Bank and the Federal Reserve doing the same thing, how many of you are even aware of what I'm about to tell you? Are you ready? Sit down. I want you to check this out so you know I am not making this up. Okay? Federal Reserve's own website. Since July 6th, this month, okay, the Federal Reserve has been buying $380 million of assets per day. Per day. That comes to $8 billion. But you see, you're not allowed to know that. No, absolutely not. Yeah, and like I said, don't believe what I'm telling you. Go to the Fed's website. Just look at the time period between July 6th and today. $380 million a day. Like I just said, when you have an environment of easy money that's just not going to stop, it doesn't matter how bad the economic news may be. It doesn't even matter. Companies like Microsoft and Google, both of these companies missed their earnings and they both took off. I wonder who's buying that. Again, this is a mechanism here, people, in place. You know what's going on better than anybody else. It's a deliberate act to create a risk-on environment via central banks to force cash back into the stock market to continue to inflate that bubble here. Speaking of that, 10-year yield came down. I'm laughing again. I shouldn't be laughing at this, but it's pathetic. 2.77. Just consider what I'm about to say. Just a few weeks ago, we watched that 10-year yield explode over 3.5%. Now, by some miracle, it just happens. It just happens. We've now cratered to 2.77. You tell me who's buying, all right? It's pretty astonishing to me, people. It really, really is. So on top of that, I got a few other things I want to cover here with you. Let's start off with this. I'm laughing. Tomorrow we're going to get this big anticipated, gross domestic product number, GDP. How many of you, with the show of hands, believe that number is going to be real? No matter what, let's say, for example, this number comes in really great or really bad. Do you think it's real? And do you think it matters when you have central banks buying it all and you're not supposed to know that? Oh, no. Oh no, $380 million a day does a lot to prop up the stock market. Yeah, $8 billion in not even a month with regard to the Federal Reserve. But you see, again, they don't think you can handle it. They don't think you can handle the truth. Okay, whatever. Okay, let us move forward here. So yes, indeed, people, we got this rate hike today. So what does this mean? Let's put a perspective on what this means. So now with I'm laughing again with the Federal Reserve, nudging higher the federal funds rate 75 basis points. What this means is all it means, okay, and you're not supposed to know this either, is now the overnight lending rate between institutions that you and I, the whole scam that's been going on to fake liquidity to make things seem a lot better than they are, because we are marching towards a liquidity crisis. Now it's hovering between 2.25% and 2.5%. Now let's just think for a moment. Let's just you and I, because we're friends, we're close friends, honestly. So now that we understand what's going on, nudging rates higher, Federal Reserve, federal funds rate, 2.25 to 2.5, and we have, by their own numbers, inflation rising at about 9%, for which, did you listen to the Thing speak today? Jay Powell, he said inflation is going to get worse. That was enough to push the stock market higher too. Oh yeah. Anyway, so explain to me, okay, maybe, I'm sure you're a lot smarter than I am. I'm certain of that. Okay, so with the federal funds rate now at 2.25 to 2.5%, how does that prevent inflation surging at around 9% from getting worse? Oh, it doesn't. That's right, it doesn't. Ding, ding, ding. And then with the Federal Reserve buying, assets like they're going out of style, along with the European Central Bank, you think inflation is going to stop? No. Why is it, do you think, that during the entire back and forth dog shit Q&A, questions and answers between the Fed chair himself and all those freaks over there, no one's bringing any of this up? I wonder why. Oh, maybe because 90% of it's all scripted. It's really the truth. The Fed chair cannot be made to look stupid. So he's pretty much aware of the questions that are going to be asked before they are. Now, let us again move forward here. We got some other news I want to cover with you. Yesterday was the International Mafia Fund, the IMF, cutting their global growth forecast. Well, today it was the World Bank following it up as well. So you see, what we have here is institutions, even Fed Chair Powell today, admitting that our economy is slowing, admitting that inflation is going to continue rising. You mean it wasn't transitory? Oh, how did that work out? You mean it wasn't peaking either, like a couple of weeks ago and then several weeks before that? Now he's admitting that it's going to continue higher? Oh, but that's enough to push the stock market higher across the board. Oh, yeah. Also, Bitcoin and cryptos took off today. Gold and silver recorded bid. Crude oil surging higher. Dollar got hit today. And, essentially that's the story. But really, let me ask you, does any of this surprise you? Now, if you are a small business owner here in the United States, I wonder if you're part of this group here. So 35% of U.S. small businesses saying that they could not pay their rent in June. 51% of U.S. small businesses saying that they may have to close because of rising costs, and the stock market goes higher. This is the corporate agenda, people. They have been deliberately, since, the whole pandemic, the whole scamdemic thing, what did they do? They shut down the global economy, realizing that corporations were going to be able to weather the storm. What they were trying to do, with obviously very successfully, was wipe out U.S. small businesses because they want to foster the corporate agenda. And this is still manifesting itself here. With over 50% of U.S. small businesses here, at least in this survey, saying that they may have to close down permanently because of surging inflation. Does this surprise you at all? What has this guy been explaining since time immemorial? Middle class is going away. Small businesses are part of that. The merger between corporations here and this new government entity is really something else to think about, honestly. And it's a wipeout. It's an extermination, and you all know that. But that does not mean that the stock market's not going to go higher, especially when you have unlimited amounts of cash being pumped into it to buy all the debt. The only reason why central banks buy debt at like they're doing right now, don't call it quantitative easing. Yeah, it's quantitative easing, is to foster an environment of risk to pump the stock market and to keep real estate prices also elevated, despite the fact that pending home sales, again, a 20% drop year over year. How is this being reflected in the prices of real estate? Yeah, they're going down, but not that much. Nothing makes sense anymore, as I've been telling you for the longest freaking time. Anyway, what else here did I want to say? I think that's about it. We covered everything that we need to cover, at least in my view right now. But I do want to hear from you. What do you think? Pick one of the things I spoke about here. What affects you the most out of what I just spoke about? Is it the fact that the stock market is now being pumped up and we're probably going to hit new record highs, like I said, would likely happen earlier in the year? And everyone thought, oh, the market's crashing. It's crashing. It's finally doing it. Like these crash callers I've been saying every single month. And again, look, it's in our face. They're wrong again. Unbelievable. But you can't blame them for being wrong, because it doesn't make sense what's going on here. We wouldn't be anywhere near this if central banks were pumping it all. So there's one little bit of I guess, I don't know, credit I'll give to the crash callers. But you see, but look, calling for a crash every single month for years doesn't help anybody. Okay, this has been a normal correction, but what you're seeing now is anything but normal. This is central banks again at it, pumping the market, keeping rates suppressed, making sure inflation continues to skyrocket as they destroy U.S. small businesses, as they wipe out the middle class, and they continue to push cash right up to the 1% and 2%ers. That's the story, people. And, well, I'm going to end this video now. Like I said, please comment. What do you think of all this? Sounds about right? I'll see you all in the morning. Love you a lot.